The NASDAQ is down 222 points as of the recording of this video. We're going to talk about why AI stocks are falling. In fact, there's a key article that grabbed my attention, and it's a subnote of this video, but we're going to talk about it. This is the main chart, the main graphic we're going to be looking at. But look at this. The stock market rally now hinges more on AI than oil. If you truly understand how big this is, it actually kind of blows your mind. Oil drives our entire worldwide economy. A lot of people don't want to admit that. They don't want to think about it, but it's oil and petroleum that pretty much goes into everything that we all need on any given day to live, to have the products that we want, all those kind of things. And it just is pervasive. And now it's coming out that we could see that AI is more important than oil from the stock market side, which is pretty profound. Okay, so what we're going to jump into in here, we're going to talk about is why the AI stocks are falling, and is this the beginning of something kind of bigger? What is going on? Is it a rotation event, or again, is it start of something bigger? And we're going to jump into every element of this graphic. Going to walk you through it. Ultimately, my goal is to kind of alleviate any concerns or things that you might be thinking as, okay, is this a bigger deal than it may be? I personally think it's a little bit of a rotation, a little bit of a sell-off, all kind of directly tied to kind of the Iran-US conflict. Also, and again, a little bit of rotation, but it continues to be that pervasive fear that we see, which is really the left side of this graphic. So what I'm going to do is I'm going to zoom in on this, and we're going to kind of take a look at that. Let me make sure you guys can see that, everything. Okay, so on the left, you see there why AI stocks are falling. Look, number one, AI spending may slow. This continues to be a mantra, a storyline, a narrative that just simply will not go away. And I think that it's because people don't really understand and or believe the numbers that are being bantered about how big AI spending is going to be. I have told you guys these numbers. The number right now for 26 is, we'll end the year at about 750 billion in AI infrastructure and AI spend build out, 1.5 trillion in 2027, 5.5 trillion by 2030, and north of 7.5 trillion by 2033. Those are true, real CapEx dollars. And I think ultimately the narrative continues to come back to, is the AI spending going to slow? Investors worry that hyperscalers may not keep increasing AI spending. I will remind you that I think that it is an arms race between the hyperscalers, Microsoft, Amazon, Google, Meta, so forth. And I would also add into their large enterprise clients, okay, which is ultimately why these hyperscalers are spending so much money. And I will remind you of the two words, arms race. I've said this in my videos. I think that that's probably one of the best scenarios that you can think of. And whoever loses that arms race, i.e. doesn't spend enough money, will be viewed as the loser in the kind of one of the entire largest initiatives, which is the AI build out. And number two, AI infrastructure is becoming more expensive. Yes, it is. Ultimately, prices are rising. We're seeing it across the board, especially in memory, where we've seen prices go up 90 plus times, if not more. Micron, HYNIX have all kind of divulged their price increases, and as they've evolved, we know that we've got a major bottleneck in the memory space, and that's going to continue to be there. It is HBM memory, high bandwidth memory, that is one of the major bottlenecks, and those higher prices ultimately are driving more profitability to the companies like Micron, Samsung, HYNIX, and all that kind of stuff. So again, those rising costs are going to continue to be pervasive, and who's going to end up being stuck paying for that? It is the hyperscalers. And again, which brings us back to number one up here in the upper left-hand corner. It is that concern that AI spending may slow. Right now, we are not seeing any indicators that AI spending is going to slow. I have said in previous videos, I think this is the main area that we need to look at from a knowledge-based standpoint and be aware that this is something that is out there. And if we do start to see glimmers of that, where we start to hear from the Microsofts, the Amazons, and so forth, the Googles, the Metas of the world, that AI spending is going to slow, then you're going to see some massive resets, some massive valuations come down. And it's going to impact every single sector of AI, from nvidia all the way down to the lowest levels of the AI stack. I really don't believe in number three, valuations got ahead of fundamentals. Again, these are narratives. These are themes that are out there, okay? And you have to kind of always temper this with what is being put out there and what am I seeing? And is it real, or is this just a news narrative that the financial network needed to fill some time with? And they're kind of dragging out the oldie but the goodie stories. I'll remind you that on local newscasts, one of the things that you see on local newscasts, and I still see here every day in Dallas-Fort Worth, is stories about fires at houses. Why? Because stories about fires get attention. What does that mean? Stories about, oh, my AI spending may be slowing. Oh, this is kind of something that we may think about. Oh, valuations got ahead of fundamentals. Oh my gosh. Those are kind of the kind of think of those as stories about the house fires that you might see on your local news. It's kind of a very similar thing. And the networks, I'm talking about online networks with printed media, video media, and all the way to the networks that you see on TV. They all follow the same rotation of series events, rotation of narratives, and they all kind of, drag out the latest things. Oh, memory is very cyclical. But no, it isn't. It's changed. We've talked about that a lot and extensively here on the channel. Okay. So what does this come down to as far as kind of AI stocks are falling? And again, AI stocks are falling across the board. We've seen it fall with, AMD. Everything is pretty much down across the board today. Take a look at AMD right here. AMD is down 2%. Okay. MICRON's down. SK HYNIX is down. Everything is down. The NASDAQ's down 260. Again, I think it's a confluence of events. I think you've got the fear kind of flowing around the 1, 2, and 3 over here. Kind of AI spending may slow. And it's always that underlying fear that I think that is being stoked by, again, the powers that be, kind of the media empire, if you will. I think there's a couple of reasons. Number one, they want views, they want eyeballs, so they can sell you ads and you can see ads, all that kind of stuff. But again, I think there's also an underlying scenario. They like the volatility. They like to see that. They like for prices to come down so that they can then invest more in and I've said that to you guys in a bunch of videos. Okay. In the middle, investors are taking profits after one of the biggest AI rallies in history. Sure. You're always going to see profit taking, but again, I don't think it's pervasive. I think that everybody is looking at down the road. What are we going to see? And which brings me to an interesting scenario I want to talk to you about. This is another article that I'm going to be doing in another video on. So talking about AI bottlenecks, okay, which were the massive $1 trillion opportunity. And it really identified 3 key areas, and it was chips, memory, and networking. And so if you kind of look at this and you couple this with the discussion we're having in this video around the fact that how and what is this going to look like from a rollout of CPUs, memory, networking, all those kind of things. These are all the bottlenecks, if you will, right? CPUs are going to become a massive bottleneck in the near future. And if you look at this, like right here, so the CPU market is growing from $35 to $40 billion today to 200 plus billion by 2030. AMD has estimates about 120 billion. They're probably a little bit low, if that's what we're talking about. And this is talking about the rise of the new agentic AI area, where we'll have these AI agents out there running everywhere. Okay. And that's the new wave coming. If you think about it, the current wave and what we've really been doing is we've really been building the models, right? And deploying the models in that capacity. It was a build model scenario. And the next wave is this agentic AI. And so if you take a look at, just to give you some perspective, and we'll bring this back to the sell-off, and we'll bring this back to the narratives on the left of AI stocks and why are they falling and is spending going to slow and all this kind of stuff. Okay. So if you take a look right now there, and this is kind of talking about, okay, Cloudflare pegs U.S. demand at 10 million CPUs to serve 100 million knowledge workers. This is in capacity of the agentic AI initiatives and 1 billion knowledge workers globally. Okay. AMD, ARM, and Intel have all flagged it, and 25 is the first year of inflection. The stocks have moved, but we think they're going to go up. This is really giving you a very simple visual of ultimately how big, because they view that there'll be 100 million knowledge workers. Each of them is going to need 1 agent per worker, which equals 10 plus agents per CPU, which equals 10 billion, excuse me. Is that right? Yeah. CPUs. And no, 10 million CPUs just in the United States. Globally, you can see it's much bigger. The point here is that we're talking about how the market is going to expand, how it's going to get bigger with this wave of agentic. And a lot of times what you see in kind of current, just right here, right now, when you're looking at it and you're seeing these articles and this kind of stuff, people are not thinking about how big, and they're not understanding truly the scale. And that's comes back to, if they really understood it, AI spending is not going to slow, because it has to be continued to go on, because again, enterprise massive companies just outside of the hyperscalers, they are not going to stop spending money on AI, because they have to deliver that AI experience to their customers in one way or the other. Okay. And all of that kind of stuff, that AI, the AI agents will be pervasive inside the company and external, as far as their internal facing work, and their external facing, the value and the benefit that those companies are delivering to their customers, irregardless of what market they're in. Everything from cars to insurance, okay? I mean, to everything, to grocery stores, all that. There's going to be, in one way or the other, the agentic AI initiative is going to hit every single sector. Okay, and there's one other one that I thought I loved right here, and it was talking about agentic era, all memory is AI memory. Okay, and it talks about right here, the HBM, the high bandwidth memory in 26 is about $100 billion market in 26. But the total addressable market from 26 to 2030 is going to grow up dramatically, scaling to 100 billion now, to 900 billion, and to 2 trillion. And again, all memory is AI memory. And by the way, this is taking out of consideration, or not even talking about, the next major massive wave, which is robotics, and the fact that the memory that's going to be needed, the memory chips inside of those robotics, and I'm talking about human robotics, humanoid robotics in your house, everything, to all the robotics on assembly lines and things of this nature. It is, again, another massive, massive sector. Okay. And kind of talking again, let's take a look at here what we got. So memory is huge. Okay. So kind of bring this back. AI stocks are falling, I think, now because of fear and uncertainty. I think because of a stoking of the fire of, okay, there's AI spending may slow, infrastructure becoming too expensive, so forth and so on. It doesn't take anything away from the overall addressable market, which are some of these graphics I just gave you here when we were looking at this. Okay, so just continue to remember that. And you need to dig into those numbers before you let it kind of spook you and you let it change your mindset associated. So what does this mean for companies like Micron and SK HYNIX and AMD? Look, bullish factors are in place. We know that the CapEx dollars are there. They're going to continue to need to be spent. Is there short-term volatility in owning Micron, AMD, SK HYNIX, nvidia? Absolutely. Okay, these are high valuations. These are kind of tight rope earnings calls that we are seeing. Any type of a misstep as far as future guidance and or current numbers and or an offhand comment about, hey, we might be shifting our manufacturing over here, is viewed as just a massive setting off of a wildfire event. We saw it with SK HYNIX about 3 or 4 plus weeks ago. We saw it with Samsung when they came out and announced earnings that were 19x. It was insane, but the stock fell down and it dragged the entire sector with it. Okay. So I think that we've got a little bit of a rotation driven by kind of fear and uncertainty up here in the upper right. AI demand remains strong. I've given you some different numbers, some different charts, analysis. Data center construction continues. These data centers. I read this morning that Meta has got a $250 billion data center they're building here in the States. I think it's in Louisiana or something like that. Long-term AI investment does remain intact. It is not going away. Companies are simply being repriced after huge gains. There could be some validity to that. I do believe that. But what you're seeing is major opportunity, to be able to buy some of these companies, right? To be able to buy, Micron in the low 900s compared to it was 1200. And by the way, valuations are still the same. Price targets are still the same. For example, Micron price target is still average about 1500. We've got high ones going all the way up to 2200. Okay. We're just in this little bit of volatility right now. And that's kind of the play that we're seeing. So kind of similar to what it means for SK HYNIX, the graphic kind of points out Micron and SK HYNIX. Again, very much similar to a picture to Micron. We know that those are two very key players in this. And ultimately, it's all different types of memory. It's HBM, it's DRAM, it's NAND, all those different types of memory are going to be needed. And in fact, it is DRAM and NAND that are going to be needed even more as we move into the agentic AI era. Okay. So I think that what you're seeing is not an AI bubble bursting. It is a little bit of a correction. I think that's a correction driven by a little bit of fear and uncertainty in the market. But again, ultimately, I think some of that is being driven by what we're seeing playing out in Iran versus US as far as their conflict. Oil prices are rising. Uncertainty in the macro of the market is what we're seeing playing out as well. And ultimately, it's not directly an AI stocks issue, if you will. And pretty much, yeah, every single AI stock across the board, from chips, memory, networking, all that, capacitors, it's all kind of being hit right now. And we do have a little bit of a repricing event playing out, and I'm not overly concerned about it. So what are your thoughts? I would love to hear from you. Links are in the description below if you want to go check out anything having to do with me or learning more about me. My name's Austin. If you haven't already done so, please hit that subscribe, hit that like. I would greatly appreciate it. And again, I'll leave you kind of with this stock, why AI stocks are falling narrative here. So I'll zoom out a little bit so you can kind of take a look at that. I know that a lot of you guys love these graphics and you kind of like to screenshot them and maybe keep them. I appreciate that. I've had people actually reaching out to me wanting to get copies of them. Yeah, so it's kind of cool how I'm able to build these to give you guys kind of a really good graphical representation of kind of what we're seeing going on in any one given time. So thanks for giving me a few minutes. I will see you. And I don't think that what we're seeing today is something to be overly concerned about. And hopefully you can kind of go about your day and go, okay, I think I'm a little bit better now. I understand a little bit more about it. All right, have a good one. Take care.